Good morning and welcome to the Killik & Co market update. Spotify has joined the stock exchange this week, and at the end of its first day of trading it had a valuation of $26.5 billion, despite not having yet made a profit. And that has caused some investors to draw comparisons between Spotify and Netflix, because Netflix was also loss-making for many years. Now, Spotify at the moment has monthly paying active users totaling about 71 million, so quite a significant number there. And actually it's been a very successful few years for the US streaming industry. Now, as you can see by this chart here, the revenues of the industry were about $1.8 billion back in 2014. And last year they came in at $5.7 billion, so very impressive growth there. And actually last year, streaming accounted for about 65% of revenues across the whole US music industry, so a very significant proportion there. So we've been looking at Spotify, and as investors we're asking ourselves three questions. The first one is, what is the future of these music streaming platforms? The second one, is Spotify the best music streaming platform? And thirdly, is it best to own the music streaming platforms, or would it be better to own the record labels that actually have the rights to the music? So that's what we're looking at as we analyse Spotify as a stock, and we will be watching it closely over its first few weeks of trading on the stock exchange. And Spotify aside, there has been quite a lot of other news elsewhere in the tech sector, and there has been quite a lot of volatility this week. So we've been looking at three of the big tech companies: Amazon, Facebook and Google. So first of all, looking at Amazon, they had some bad news this week when Donald Trump was tweeting about how they've been taking advantage of the US Postal Service. But then on the plus side, there has been speculation that the Pentagon is about to award Amazon a $10 billion contract for cloud services. So that really demonstrates how well Amazon's web services division is doing. Then looking at Facebook, they had some bad news earlier in the week when they said that actually the number of accounts affected by the privacy scandal was not the 50 million they'd originally said, but actually it could be as high as 87 million. So that was bad news. That caused the stock to fall. But then Mark Zuckerberg actually came out and said that they haven't seen any reduction in advertising spend since the scandal first broke. So that caused a small recovery in the stock. Then last of all, looking at Google, they've been somewhat in the ethical spotlight this week. So first of all, a few thousand Google employees have signed a petition saying they are against the fact that artificial intelligence created by Google is being used to make missiles more accurate within the US Air Force. But then on the plus side, the company has come out and said that last year it was the biggest corporate spender on renewable energy. And last year it achieved the goal of all of its energy requirements coming from renewable energy, and adding up all the money it's spent so far on renewables has allowed a $3 billion investment into solar and wind farms across the US. So I think that has impressed a number of ethical investors across the world. And lastly, China has threatened to retaliate to some of the new trading tariffs imposed by Donald Trump. So Trump started by imposing tariffs on steel and aluminium imports from China to the US, and he's following up by threatening tariffs on a number of electrical items. China is now threatening to retaliate by imposing tariffs on goods that it imports from the US, for example, soybeans. So why is this happening? Why did Trump start this? Well, the reason is that there's a very large trading deficit between the US and China. And if you have a look at this chart here, you can see that last year the US exported $130 billion worth of goods to China, but then it purchased $506 billion of goods from China. So there's a huge difference in those two figures, $376 billion to be exact, and that's the value of the trade deficit. And a large trade deficit is seen as being a negative because it can cause weakening in a country's currency, and also it leads to low employment numbers. So that's why Trump is trying to do something to lower this deficit level. But actually this week the White House has said that he's merely threatening tariffs in order to bring China to the negotiating table. So this is something that is worrying investors, and it is something that does need to be kept a close eye on over the coming weeks. And moving on to the week ahead, it's quite a big week for US financials. So next Friday we're expecting results from JP Morgan, Citigroup and Wells Fargo. That's it from us. Have a great weekend, and we'll see you next Friday.